What is happening, investors? It is your boy Jack. I am not a financial advisor, and today we are going to be speaking all about casino stocks. This is something we've never really spoken about on the channel before. I've never given them much thought, and the news just came out that Las Vegas, big Las Vegas, the home of casinos, is opening back up June the 4th next week. So I'm sure a lot of people are going to be wondering, should you be buying casino stocks right now off the back of this news? And we're going to cover everything that I possibly can today. There's a lot of information to cover here because it's a bit of a crazy industry. It's not predictable, it's extremely cyclical, and it's just a little bit scary in general. So we're going to get into all of the juicy information. Right before that, can I ask you please smash a like on this video? It actually took a lot of time to just do the research into these companies, and when you smash that like button, it genuinely helps me out so much. And also, make sure to hit that red button. We are so close to 5,000 subs, and at 5,000 subs, my full stock portfolio reveal video is coming, and I'm so excited to share that with you guys. And I am just waiting on samples of these hoodies to get sent out to me, and then the online store is opening, and then you can let the world know that you are not a financial advisor. And one more thing, please drop me a comment, let me know what your thoughts on casino stocks are. If there's any of you out there who are invested in any casino stocks, please let me know below. I want to know why you decided to invest. With all that being said, guys, I'm excited for this one. Strap yourselves in. Let's get straight to it. So the very first thing I want to speak about today is the fact that Las Vegas is opening their hotels and casinos on June the 4th. And I want to speak about what it's actually going to look like, because obviously social distancing is still going to be in place. You're not just going to see groups of thousands of people flocked in together in these casinos, which is what you'd be used to seeing in a casino. So what can we expect things to actually look like, and how will that affect these companies? So, temperature checks. All guests must have their temperatures taken on arrival, and properties must have medical crews on site at all times. There must be designated areas where visitors can be tested for the virus and wait for results. So fairly standard. We're going to expect this to happen pretty much everywhere in the world where you're going from one place to another, or where you're going anywhere where there is crowds of people. There will be masks available on request. So casino companies such as Wynn Resorts, MGM and Caesars Entertainment announced all employees will be required to wear a mask at all times. So that's obviously a good thing. And as well, the Gaming Control Board requires all properties to have masks available for guests, who will be strongly encouraged to wear them. So you're going to see a lot of people walk around in masks. Straightforward stuff still. Now, casinos, okay? This is what we really want to talk about. Don't expect to grab a slot machine next to your sweetheart or best friend. Gambling in the time of the virus will be more solitary, and occupancy limits in gaming areas will be cut in half. So the casinos are opening back up, but their occupancy is being halved. Tourists will see chairs and stools in front of every other gaming machine. Properties must regularly disinfect gaming machines, chairs and other equipment, and dealers will even offer card players a complimentary pump of hand sanitizer between hands. Very nice of them. So a few less important points. There's going to be crowd police. So casino employees will make sure guests don't bunch together. Checking in, waiting for a table, this is not as important, okay? But MGM said a contactless check-in system through the MGM Resorts app will allow hotel guests to go through the process on their personal devices with minimal interaction. So again, a very easy fix for the problems that are at hand. And then all clubs will remain closed. So a lot of people still might not go to Las Vegas yet because people want to go to them clubs after they've had their day of gambling. And the airlines have pledged to add more services. So that's quite a nice thing to see. Airlines are getting back up and running. So here are the actual recommendations from the Gaming Control Board, okay? There'll be a limit of 6 players per craps table, 3 players per blackjack table, 4 per roulette or poker table. This could be a big one. And slot machines are spaced out, or that every other tier is removed. And the board's plan limits a property's occupancy to no more than 50% of its normal limit. So they're opening back up, but they're not going to pick right back up where they left off. And you also have to keep in mind that a lot of people have a lot less money right now, so even if they can go to a casino, they may well not do. And another thing to keep in mind, that a lot of people who go to Las Vegas and go to these hotels and casinos are traveling, and a lot of people are still afraid to travel. So I don't think that as of June 4th, straight away these places are going to be back to full or 50% capacity. So now I want to speak to you about 3 of the big casino companies, and if I was going to buy one, which do I like the look of, which do I really not like the look of, and we'll take it as we go. So the 3 companies we're having a look at, one is going to be Wynn Resorts, okay? The second is going to be MGM Resorts, and the third is going to be Las Vegas Sands. So here's a look at how each of these companies has performed over the last 6 months, okay? You'll see here that grey is MGM, blue is Wynn Resorts, and orange is Las Vegas Sands, okay? And we can see that when one goes up, they all generally go up in different amounts. We go down, we go up together, we go down together, and then they've all kind of rebounded together. And we can see that MGM from its 6-month high is still down 46%, Winning Resorts is down 31%, and orange Orange. Las Vegas Sands is down 22.63%. So this doesn't give us the most information in the world, obviously. It shows us MGM has been hit the hardest, Las Vegas Sands has been hit the least. And now we're going to have a look at it on some smaller time frames, okay? So the 3-month time frame, MGM down about 30%, Wynn is down about 23%, and Las Vegas Sands is down about 16%. We go to the 1 month change, okay, and MGM is up nearly 9%, Wynn is up about 1.2%, and Las Vegas Sands is up 4.23%. And the last 5 days, MGM is the only company who has actually gone up in value at 4.42%, Wynn is down 4.2%, and Las Vegas Sands is down 3.2%. So we see that in the last month or so, MGM has been performing better than the other two companies. But in the grand scheme of things, Las Vegas Sands is definitely performing the best. Now what we're looking at now is some PE ratios, okay, and we can see the last quarter of 2019, Wynn was trading at a 120 PE ratio, so not ideal whatsoever. Las Vegas Sands at nearly a 20, and MGM at 8.57, so MGM by far with the best PE ratio. Now, the first quarter of 2020, Wynn has actually gone down to 0, so that is absolutely horrific. MGM is at 2.16, so very low PE ratio, and LVS is at 15.45, so you know, a very fair PE ratio. So starting on Wynn Resorts, because I think this is one that an awful lot of people are interested in, and I see this probably spoken about the absolute most. And I have to say right off the bat, I don't like the look of these guys whatsoever. So Wynn Resorts did historically pay a dividend, and it was actually quite nice last year. I believe it was 4 to 4.5%, but their earnings payout ratio at the end of last year was negative 118%, okay? As of now, it's 0 because they have since cut that dividend. And we can see that it's been a struggle for a considerable period of time. Their free cash flow payout ratio has been negative a lot. Last year, negative 254%. Their EPS for the last 12 months was terrible, and for the next 12 months is even worse. And again, free cash flow per share, it's just terrible in recent history. Earnings per share growth is terrible, sales growth is terrible, their shares outstanding hasn't really done much, their total sales has come down from the last couple of years, return on equity, negative 21%, like that is just absolutely terrible. Return on invested capital, 3%, operating margin, ooh, free cash flow margin, negative 4%, everything looks bad. I see nothing that I like. So some important information from their Q1 earnings, okay? They announced EPS of negative 3.54 on revenue of 953.7 million. The anticipated EPS was negative 88 cents on revenue of 1.09 billion, so it's not looking nice. So the same period last year, they had an EPS of 161 on revenue of 1.65 billion. So it's clear to see it's been absolutely horrific for these guys. Now, the expected EPS for the coming quarter is negative 1.49 and a revenue of 964.5 million. It's hard to know what's going to happen. It really is, until we see, you know, what happens when these guys do open back up, if people go to the casinos, if they spend money, if they're at that 50-ish% capacity, who knows what's going to happen. So for me, Wynn are out of the question. I will not be investing in them. It's not going to happen. If we look at the last 5 years even, okay, about 5 years ago, they were about $100 a share, okay? There's some downwards movement, down 30, 40%. It trades sideways for a long time. They go up as high as 92-ish%, which across the span of 3 years is obviously very good, but that was only very brief. And it came right back down to trading sideways. You know, it's up 40%, it's back down, it's up, it's down. And now this happens, and in the 5-year chart they're actually down 17.37%. And things don't really get much better when you look at the max stock chart. It's just this constant cycle of up and down. I really don't like the look of them. Even for a cyclical industry like casinos, these guys are really cyclical, and they see massive swings up and massive swings down. So for me, a long-term investor, I don't really believe in them, you know. Even if I was to do these in a short term, I wouldn't know where to sell, where to get out. You know, this company could go up 50% and then be right back down that same 50% in a matter of a few weeks. Wynn is off the table for me. Now, we have to speak about MGM and Las Vegas Sands, and these two do have a lot more potential in my eyes than Wynn. Having a look at MGM now, okay, if we just start off on the 1 year chart, we can see that a year ago, up to the highs, they had gone up 32-ish%. So it's been a nice year until this happens, okay? And we go from highs to lows, down 78-ish%, and currently still down about 50% from their recent highs. These guys are trading with a PE ratio of 3.1 as of right now. I think it was 2.56 earlier in the video. You get the picture. It's a very low PE ratio. Now, I know in general, a low PE ratio can be a good thing. It can mean that you're getting a company at a very good price, but that could well go negative, okay? Earnings per share forecast for the next 12 months is negative 338. So it's a nice PE ratio, but it might not be very safe. Now, another company who's cut their dividend, for some reason, they didn't just completely cut it. They've left it at 0.06% of a yield. I don't know why. Maybe they just want to keep their 3-year dividend streak alive. I don't really get it, but anyway. Here I'm looking at a company who has had a positive EPS for the last 5-6 years. Now, going forwards, obviously it's looking to be down, but these projections wouldn't have really taken into account the June 4th reopening. So again, I expect the EPS to be negative, but not this negative. Free cash flow per share, okay, so these guys have had it positive for the last 4 years. Again, we're looking at some relatively poor EPS growth, we're looking at some poor sales growth, but not as poor as Wynn Resorts. Total sales as well, it's actually been quite steady to the upside. Return on equity, okay, so it's actually good. They have a 23% return on equity, only 2% return on invested capital, so not fantastic. Free cash flow margin is still positive. It's not in a great place, but it is positive. And their operating margin, again, is not great, 7%. Net debt to capital, last 12 months, 0.52, not good. Net debt to EBITDA for the next 12 months is looking like an 18.27. It is not looking good for these guys either. Now we have a look at the balance sheet for these guys, okay? Current assets are at pretty much 7.6 billion. Total assets, 39 billion. Current liabilities are only at 2.6 billion, okay? And total liabilities are at 25.7 billion. So more than likely, they will get through this. It's just a matter of when will the stock price actually start to go back up? When will they become profitable again? When can you expect a return on investment? Does it have lower to go down? There's so much uncertainty in these casino related stocks. With a company like these, I think if you catch them at the very bottom, if you're a magician and you know where the bottom is, you can expect some absolutely immense short-term growth. But even catching them somewhere like here at $17, yes, it most certainly has the potential to go back up to $30, $35 at some stage. Who knows when that's going to be? Who knows how much lower they can go first? There's just so much uncertainty around them. Nothing like this has ever really happened before. I mean, look, let's even just have a look at the Great Recession and look at how booming these guys were doing coming up to the Great Recession, okay? And boom, they dropped over 90, close to 95%. And keep in mind that during the Great Recession, you know, there wasn't social distancing in place. People could still go to these casinos. People didn't have money. Right now, people don't have as much money, okay? And they can't take as many people into the casinos. So, we've seen massive drops like this happen before. And off the back of these massive drops, yeah, it can be some really nice recovery. But if you don't get in at the very bottom, if you get in a little bit late, that just gets halved and halved and halved. So again, for me, my overall view on MGM is that I'm not interested. I know right now the PE ratio looks fantastic and I do see some short-term potential, but I don't think the worst of it is over for these guys just yet. But we'll have to see what happens. So that leaves us with one more company, okay, and we have to go through Las Vegas Sands. Now we can keep in mind that these are the company who have performed the best out of the three that we're speaking about today. They're only down 22.63% from their recent highs. So they're the company who got hit the least, but they're also the company who's potentially recovered the least. So we go from lows up to highs, and as of right now, they're up 28ish%. The other companies, some of them are up over 100%. Look at MGM, for example. MGM's up 141% from the lows, okay? So obviously these guys got hit an awful lot harder, but they've also recovered very, very hard. So if I did want to go for a company that I believe has the most potential to give me money very quickly, it more than likely would have to be MGM, because LVS just hasn't had that same volatility. And another company who looks very similar to Wynn when we have a look at the 5-year stock chart, okay? It goes up, it goes down, it goes up, it goes down. Then we did get this nice little run, and you know, there was a stage where it was up 58% in about 3 years. But as soon as that happens, it just goes straight back down, and you're back to pretty much where you are. It goes up, it goes down, it goes up, and now it's gone down massively. And again, we're in the red on a 5-year stock chart. I don't really like these casino stocks whatsoever. I really did try to like them. I tried to be optimistic. I tried to find one that I would be happy to invest in. And I just can't do it. I just see so many better places to put your money. I mean, if you want a high risk, high reward stock, just go with a spec stock or go with an airline, you know. The upside potential is so much more than these guys in the short and long term, and the risk, I don't see it as being as high. Now, another company who had to cut their dividend, okay? Free cash flow payout ratio the last 12 months, 477%. EPS has just been going down and down and down. Forecasted for the next 12 months, 0.83 cents. Now, free cash flow per share is still positive, which is what you want to see. Earnings share growth, bad. Very, very bad. Sales growth, bad. Very bad going forwards. Total sales billions, again, bad going forwards. Shares outstanding has been going down over time. Return on invested capital has been decent. Return on equity, again, has been decent. But still, there's nothing special. Again, a company during the Great Recession who literally dropped 95%. I mean, yeah, if you can get in after they drop 95%, you can make close to 5,000%. But if you can get in after something like this happens, okay, where we've only dropped 34% from the recent highs, I don't ever see there being any crazy growth potential from these guys. I can't see it happening. I don't see any reason to buy any of these casino companies. Now, I might be missing something that other people are seeing, but for me, I tried hard to find a reason because I want to believe that I can invest in a company that's going to give me back 300% in a year's time. I just don't see that happening. The most exciting thing that I've gotten out of all of this is the fact that, Vegas is reopening. Vegas only next week is reopening. That has to put some optimism in the market as a whole, not just for casino stocks, but for everything. It might help our airlines, it could help literally everything. But it's also quite a scary thing, because what if there's a second wave, what if the virus just outbreaks again, and all of the hard work the world has done is wiped out? Me personally, I'm very optimistic. I hope that the safety measures that are put in place, work and let these businesses stay open and begin to flourish again, which will help absolutely the entire world. But you have to stay realistic as well and understand that this could carry some real risk. So guys, that is exactly where I stand in regard to these casino related stocks. Sadly, I'm not too optimistic about them. I really hope that I would be when I started looking into them. But I just think my money could be better spent in a lot of different sectors. I do see the appeal, I do see the potential, and again, I'm not a financial advisor, so you do you. And again, if you own any of these companies, please drop me a comment and let me know why. Let me know the reasoning behind your purchasing of these companies, because I'm sure that there is people out there who have caught them at the bottom and who have made a lot of money and are willing to hold them for a long time. I hope that you all did enjoy the video, guys. If you did, please drop it a like and subscribe if you're new around here. It genuinely means a lot to me. We're so close to that 5k. Hope you all have an absolutely fantastic day, people, and I will catch you for the next one. Peace.